Hello everyone, this is Evan here from the Trade Risk on Friday, July 29th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. If you haven't yet subscribed to our YouTube channel, please do so. Bottom right hand corner, click that red subscribe button. Keeps you up to date with all of the latest videos that we publish. It also lets you know when we're launching a live broadcast. We've been doing those about once a week, pretty spontaneous on the timing, but if you want to jump on in on some live Q&A, ask some questions, request some charts, it's a great format for that. So make sure you're subscribed, keep up to date with all of the latest that we're putting out there. And now getting into markets here, the S&P 500, a very sleepy, flat summer trading week here in markets. S&P 500 SPY ETF closed flat on the week, down 6 basis points, so basically unchanged. And back to the daily time frame, you can see the action here on Friday closing up towards the upper end of this range that we've been in now for 12 days. So we've been alternating between red and green closes here for the past 12 days, 1.5 point range. The narrative hasn't changed here. We put out our midweek video on Wednesday, basically citing the same thing, and not a lot has changed. Now, what has happened here over the past couple of months? Well, or at least the past month, we've had this massive kind of upside breakout here to all-time highs in the S&P 500, right? That took place over the last 3 or 4 weeks. And now, for the past 12 trading days, we've worked off those extreme overbought conditions in this sideways channel here. And you can see now moving averages have caught up. We're not so overbought anymore, and we're kind of in a wait-and-see mode. We had a lot of earnings to get through. We had the Fed to get through this week. And now the market has, the bulk of, or at least, I'd go with the bulk of earnings and kind of data points that it's probably been waiting for. It closed out July. Let's see how it opens August. Let's see how Monday's tone is in the markets. Let's see, after it gets to sleep on the weekend over all the reports that came out, the Fed, everything. It's going to be interesting to see how we open next week. So the range here continues to be pretty clear. Again, it's a 1.5 range on each side, and we're looking for some momentum. We're looking for some excitement in here in this market. We're just not seeing that. We're seeing volatility dry up and just this very tight range ensue. So I think it still pays to be a bull here. I don't see anything, certainly from the price action, that would suspect otherwise, because we are still in the context of this long-term uptrend here, or this at least intermediate-term uptrend now, breakout to all-time highs, and we're consolidating in here. And until you see support actually get violated down below 215, 215.50, you can certainly tactically be long this market, and that's sort of the way we've been playing it. We're not fully invested. We still have about 50-60% exposure, keeping a foot in the door, waiting to see which way this resolves. That's the way we're playing this, and that's kind of what I'm looking for heading into next week. So it's a little bit of something for everyone. Internals, kind of a mixed bag, but more so on the bullish side, I guess, with the new highs now making new highs versus new lows actually reaching and extending to recent highs on that indicator. McClellan is stubbornly around flat, slightly negative. That's not so great, but cumulative advanced decline line, all of those things are kind of still shaping up in those uptrends. So keep an eye on that heading into next week for some more clues as to what's going to go on with this market and with this price action. If we look at the IWM small cap, you can see didn't quite get that close at the highs here, but the week ended up about 0.5%. You can see it's trying to stay above this 120.40 line, which has been an inflection point for the past couple of years, and the grind sort of higher here is just still taking place, similar to the S&P 500. Lots of sideways overlapping candles here, and we're trying to gravitate higher. The Qs are the one index here, the NASDAQ 100, that is actually making consistent forward progress to your upside progress, mostly fueled by a lot of these earnings plays that came out this week, most favorable, most reporting and at least reacting favorably, and that's what's helped fuel the Qs. Notice they are at a very important level. We discussed this level a few weeks back, saying 115 2015 could be the magnet. This was the previous 2015 highs here in the Qs, and you can see we're already back to that level. It's going to be interesting to see if overhead supply kind of kicks in into next week. So keep a close eye on that. So all around, I think you can still remain constructive across markets. It is sluggish time out there. It is summer trading, but if you stick with these trends, look for those individual stocks that are outperforming and leading. That's the way we certainly are looking at things and trying to play it. Getting into some other markets, TLT saw a nice day session here on Friday, up 83 basis points. You can see found support down here right after filling this gap, and it's returning or trying to return to these previous highs here. Let's see if it can get there. It certainly seems to be in motion, 8 and 20 curling up. Let's see now if it can get all the way back up here, retest them. Will we break through? Will we fail short? That's what you can keep your eye on. But if you're long, I think you can stay long. Gold also getting a nice pop here on Friday, trying to return to its previous highs. This is a market that we are long. We got involved in gold right here on Wednesday as it started to break out higher above this recent consolidation. It held the 20 period. We're still long gold. We're looking for basically a retest of these highs, get back up there, then kind of see where it goes. Not looking for a huge home run, just trying to get a little profit out of here. In an uptrend, silver also now back to highs. You can see arguably already at them, closing right near certainly 2016 highs. Bigger picture looking pretty good here in all of the metals. USO not so good. This has been in this sort of death kind of spiral lower, closed down 6.3% on the week, closed down almost 6% last week. So it's been taking a bit of a beating here recently. It's about at the 61.8% retracement from this swing low February to June highs here. It's at about 61.8. You can see it found a little bit of a reversal here. Still a lot of technical damage and momentum pointing to the downside. So it's tough to want to buy this or call the bottom, but maybe we start to see some sideways action unfold here around this $9.50 level. Going to keep an eye on that next week. Sellers still in control. UNG, this is one that we're also still long. We were long in this consolidation. We got involved in this. We saw a really nice move, 7% on Thursday, breaking it back up to the to the upside, kind of resuming this trend that it's been in. So we're staying long UNG. Things look good right here. You got some pretty clear support below us around $8, $7.90, $7.85. You can use all these levels down here, but UNG looks pretty good. So that's sort of the wrap up there on the major markets. If we get into some of the sector analysis here, XLK, similar to the NASDAQ 100, extending its way to multi-year highs here. You can see as it pushes now above all prior resistance here. You'd have to go back to the 2000s to find higher prices. So XLK certainly looking good. Healthcare also looking good. Biotech in particular. This is another sector that we are long, that we've been involved in since this day right here. We continue to hold a position. We like the breakout. We like this gradual trend higher, and we're sticking with it, making some money in this. Looks good to me. I like it. And then finally, IYR also pushing to recent highs here, or 2016 highs, and not quite all-time highs, but multi-year highs for sure. So those are the strength right there. XLE also notable just with this reversal, this engulfing day. This will be interesting to see if this is some type of pivot low here in XLE. We did try and break down, or we gapped down this morning, tried to probe lower, and then we reversed, closed on the highs, engulfing this session. So keep an eye on that. Could be interesting. And then just the tightness here in the financials, similar to the S&P 500. Could be your early clues. If financials start to go, maybe that is the S&P 500's cue to get going as well. You can see it's right at a very significant trend line. That's the hesitation here. So which way this leans next week will be of great interest. So keep an eye on the financials. Now, looking at some of the individual names, we had Apple reporting earnings, a beat or at least above expectations. Market responded favorably to it, gapped higher, and it's holding that gap right now, and it's at a very important area as well. You can see it's challenging this downtrend line and it's trying to, you know, kind of solidify some type of solidify this support and really get a breakout going here. So it'll be interesting to see if this gets some forward progress next week. You want to see the gap defended, you want to see upside progress continue, but you could get a breakout in Apple there in the coming days, weeks, or right now as it's in progress. Finally, Google, or not finally, next is Google. This has also had a nice gap higher today on Friday thanks to earnings. Thursday evening, another beat, favorable response, gap to all-time highs, or just about there. Certainly were all-time highs, I believe, in the after hours. Monthly chart, take a look at this. Looks great on the monthly chart, right? You've seen about 7 months of consolidating here in a long-term uptrend, and then this could be sort of your breakout month, 12% higher this month. If this can continue, I think, you know, you got a pretty good line in the sand here, above $800. That's when you'd want to be involved in Google, considering it's been consolidating for about a year. If it can start to get to 800 and hold above there, that's probably a stock that you want to own, or at least look for that momentum breakout, something that we'll be interested in. Tesla also finishing strong on the week, 1.81% on Friday. You can see as it starts to head back up towards the you know, at least mid to the upper end of this range. It's been pretty resilient here through all the news. It'll be interesting to see how that unfolds. And Amazon also reporting earnings this week, gapping to all-time highs and failing just, you know, coming down to the lows here, kind of filling the gap, or at least trying to today. It did kind of break this pattern of lower highs here. Let's see if it can continue its strength. Similar to Google, I mean, I think you can use Friday's highs here, 764. If you can get a close above there, get action above 764, then you certainly have that momentum kind of trend trade back on the table. But I mean, clearly, depending on your time frame, this trend is very, very much intact and not close to weakening. So that is the video for this week. Thank you guys for watching. Hope you had a great week. Enjoy the weekend, and I will talk to you soon.